afternoon, everybody. How are you doing? Hello, America again. If there's anybody from America in here. There's only 22 people in here, so I assume it's nobody from America in here because we get about 2 or 3 times that when we do London streams. But anyway, hello. Welcome to Trump's world. I know. Afternoon, Monkey, Harold, Fletch, Mark, Crum, XRUpdate.news, Yusuf, afternoon. Afternoon, Evil, Figinia, how we doing? What a ride. Yeah, US dollar. Wow. This is why I got flat before the election. Nuts, isn't it? Yeah. Oh, what happens with the US dollar next? Well, who knows? We'll have a look. Afternoon, Niels, The Hive. I'm a depressed American. Yeah. In the UK, we don't get it. We just don't get it. Why would you elect an idiot like that? But then everybody goes, hey, I'm a Trump supporter. And I ask them why, and they give me answers, and I just can't agree. Anyway, we're not here to talk politics. I just enabled the bell to Trump's account on X. Yeah. I was just saying in the Discord group this morning, when Trump was in last time, you used to get these crazy moves, which were not that big, but you get these big moves that go in, and it's Trump. Basically, he just tweets something and market goes, what? And then the market goes, oh. And it never happened. It never held. Whatever happened, we got like 200, 300 ADR moves put in because Trump tweeted. But they always mean reverted. So he was absolutely brilliant for trading. Whenever he tweets and the market has a knee-jerk reaction, it always undoes itself. So if you see tweets from Trump moving forward, always mean revert them. You never know when they're going to pull back, but it's usually within 48 hours. You get V-shaped recoveries everywhere. So you get moves. I haven't got any on the chart really, but you get the V-shaped recovery move. Brilliant. So looking forward to that. But why? Why did you do it again? Anyway, afternoon, Reverend. Seems great for me, reversion. Yeah, he is. Brilliant. So yeah, what happens with the US dollar this afternoon for the rest of this week, rest of the next month, we'll have to wait and see. What happened to the DAX today? DAX was amazing today. So nice clean break on the DAX today. That was your pre-market range, which was literally the 5-minute candle, fell nicely within the range this morning. Clean break straight up to 3R within 5 minutes. And within 10 minutes, you were at 5R. I actually decided to move my target up and take a trailing stop exit instead today at 2R. So I got just over £1,150 out of it. But my God, look at it. Utter chaos. So gap up. We moved down 350. So we moved down 150 ADR. We then shot up 500 ADR. And now we've retraced 500 ADR. Yeah. So we've done 1200% of the average daily range today. Immense. But like I said this morning in the Discord group, that even my ADR dashboard is broken. Look, my everything's broken. Let me just switch that over. There we go. So yeah, just forget everything today. Really forget everything this week. The reason I wanted to go flat this week was just to take the week off. There's absolutely no point in trying to do anything this week. You can try and mean revert this. If you try and mean revert it and it works, you're going to make a lot of money. If you try and mean revert it and it doesn't work, you are going to go into drawdown indefinitely. So it's just not worth risking, in my opinion. Stop loss based strategies on this type of thing, absolutely fine. Get in when you see some bullish price action. You've got, it's that propulsion gap at the moment is holding. You've got a bullish engulfing there. So you could take a break of that high. This could be the bottom. If this is the bottom, it's going to retrace. You've got 300 ADRs worth of movement potentially on the cards here, but what if it doesn't? Yeah. So, or if you're going to trade anything this week, use a stop. Do not try and position trade any of this. It's just crazy. So I'm flat on everything. apart from Swiss yen, which used my break even as support this morning, which was lovely. I had an exit on this yesterday, and I decided to hold it because I've done 18%, 18.5% this week. So a lot of those US dollar CAD positions I had on, the aggressive ones, all paid out beautifully. I held a trailer, which got stopped out when the announcement came in this morning that he was going to take it. So that was the last trailer I had on. So I've had a really good week. We're back up at the high of last week on the US dollar CAD again. Look. So Trump is good for the economy. So yeah, we will see. So DAX was a nice clean break today. The FTSE was a clean break. The range was too big for me this morning on the FTSE. So I didn't get that triggered, but it did do 5R, the same as the DAX did. But as you can see, completely undone the whole thing. So let's have a quick look at the open on the NASDAQ and the Dow. So I'm long NASDAQ, Dow no trade. Range is too high. As you can see, ADRs are absolutely screwed today. The Dow has gone 135 points. Normally does 46 a day, so it's 300 and something ADR. NASDAQ, not so much today. The NASDAQ's up approaching 150 ADR, so not such a big move on the NAS today, but nice clean break on that one. We're at 2R already, coming into the monthly highs. Is this an all-time high? Yeah. So all-time highs on the NASDAQ today. We're going to get, I'm pretty sure we're going to get an all-time high today. Wouldn't that be great? Trump gets elected. The first thing he can say is, I just made all-time highs on the NASDAQ. It's going to happen. You watch. Within the next 24 hours, he will be boasting that he's just put an all-time high in on the NASDAQ because he's in. The market loves him. So we're approaching 3R target on the NAS. We are hitting some limit orders at the highs, so it is stalling out at the highs. So we have got some resistance there. See if we get through it. So clean break on the NAS. We're through. Mental. Morning, Meh. Even. Afternoon. Morning, even. Afternoon. Don't know where we are. Afternoon, Pot DJ. Tom, no S&P. No, I don't trade S&P. S&P and the NASDAQ do the same thing. So the S&P is rallying at the moment, the same as the NAS is. Usually. I don't know what the S&P is up to. Yeah, S&P's 200 ADR. All-time highs on the S&P look today. So there you go. S&P's all-time highs as well. Already done it. Might as well keep that chart there, actually, just minimize it. Right, so let's see if we can get 3R on the NAS. And then we'll have a look at the FX side of things. But as I say, there's not a lot really to talk about this afternoon, is there? It's Trump. Afternoon, Neo. 17% this week. Yep. Still lost a lot last week. So it's haven't recouped last month's losses yet. But hopefully. But I'm not taking any more positions this week. So this week is popcorn week. Sit there, watch, and see what happens. 3R's just coming up. Don't do that. Just taking that off. It's just hate it when it misses my target by literally a pip and a half. It'll hit target, but it hasn't hit target, so I'm taking it manually. So there you go. So TP1 hit. We're up at 150 ADR, but I mean this thing could go forever today. There's no trades at all on Dow today. Pre-market range is too wide. The opening range as well is too big today. So opening range is 18 points. 20% of ADR is 9 points. So it's too big to trade. Obviously, we've had so much volatility today. I'm just going to let the EA make the decisions for me today. Nasdaq's screaming off. So there's going to be two very nice profits today. One on the DAX, one on the NAS. Should bank 2.5K today, hopefully, if we can get a run on this. Or a couple of K. So today's news, obviously, we'll quickly run over yesterday's news. So we looked at the Aussie rates yesterday morning. We had the PMIs yesterday afternoon, which came out as positive. Not that the market did anything with that information, because obviously it's not going to do anything until we knew what was going on here. Obviously, the elections have happened. We also had the unemployment rate in the New Zealand dollar. That has come down, which is good for the New Zealanders. Takes a little pressure off them dropping interest rates, but no real reaction. Not that you can tell, but I mean, there was no reaction to the news on the New Zealand dollar. But everything's obviously gone mental, so you can't really see what impact any news is having at the moment because it's all gone crazy. But today, obviously, we've had the PMIs this morning for the pound. We've got IV PMIs in 30 minutes for the CAD. That's pretty much it today. So today's news basically is nothing because obviously the market is reacting to that. Tomorrow's a big day. We've got the Bank of England rate, which is dropping. We've also got FOMC tomorrow. So tomorrow you could completely undo everything that's happened today. Yeah, the market's rallying off the back of Trump because dollar loves Trump. They're dropping the interest rates. Dollar hates the interest rates dropping. So we could quite possibly see a complete mean reversion starting on this tomorrow. I very much doubt we'll be able to do a full mean reversion on it based off of the FOMC press conference. But if they decide to drop that down to 4.5, you're going to get 200 ADR, 300 ADR out of it. We've done 500 ADR today on a lot of these US pairs. So, you know, there is a good chance that we'll be all the way back down here tomorrow evening. So we'll wait and see. But it's with this type of movement, you just have to watch, let it fizzle out, and then make your mind up which way you're going to go from there. So it's just an utter mess at the minute. Afternoon, CK, how are we doing? Did you used to trade the S&P? Yeah, used to, but there's not much point. If you look at the S&P and look at the NASDAQ, do a comparison between the two. The NASDAQ moves faster, but they move together. So most of the time you will find correlation between the NASDAQ and the S&P. Not always the same, but a lot of the time the same. But what you do often find is if there is no volume and no volatility in the NASDAQ, there's no volume and no volatility in the S&P. So what you tend to find is you either get a clean break or you get hedged on both. So the whole purpose of the opening range breakout strategy and the stock index hedge strategy is opening range momentum breaks. You're either just doubling up on your profit or doubling up on the hedge. So you might as well just trade one. The Dow does move very differently, as you can see. Yeah, the Dow moves differently. The Dow's done over 300 ADR today. The NASDAQ hasn't even done 150, or just about done 150. So you do get very different movement on these two, but the NAS and the S&P are the same. So I found that what was happening was I'd get a lovely clean break on the Dow, and I would get a double hedge on the S&P and the NASDAQ, which would make it an unprofitable day, unless I got out of those hedges, which usually manage to do. But obviously when you don't, it costs you twice as much. So by just trading the two, if we get a double hedge, that's fine, just deal with it. If we get one hedge and one not hedge, one clean break, one pays for the other, and you make a profit. So it's better actually from a portfolio perspective, just about get stopped out in the NAS. So it's just trailing stop at 2R. So it's better actually just to trade one of each. And if you get clean break on both, happy days. Yeah, it just didn't make sense to keep trading the S&P. You only I mean, when you look at a back test on any strategy, you can put these together in a portfolio and analyze them, and analyze the profit curve, analyze the trades, etc. But it's not until you actually trade something live you actually realize that there's just no point in doing both. So that was the conclusion I came to. Nasdaq's pulled back from 150 ADR, so this could be rejection at the monthly high. So this could basically be limit orders triggering at the high. I suspect it's just a quick profit take on the open and then they'll rally it, but we'll see. Big move. So from an FX perspective, there's not really a lot we can look at today because as you can see from the ADR dashboard, it's crazy. So anything that has hit ADR today, a lot of this stuff, obviously, you had some kind of mean reversion out of it. If you flick through all the pairs, basically, obviously, this has done 200 ADR. We've pulled back 150 ADR. Aussie dollar Swiss, we're up at 150 ADR, but we actually pushed down 1 ADR before we pushed up 150 ADR. Now we've pulled back about half an ADR. You know, it's just nuts. So anything that you get into today, you're flipping a coin as to which direction it's going to go. So there's not much point really in analyzing anything. If you look at all the yen pairs, we're still very constricted. So when you look at the ADR dash, yeah, the yen has not moved anywhere near as much as everything else. You look at the Swiss yen there, the Aussie yen. So we've had 150, 125 ADR on a couple of them, but there's a few that haven't even hit ADR yet. So it just shows you that the market is literally reacting to the majors, pulling money out of majors and pumping it into the US dollar at the moment, but they're leaving the safe havens dry at the moment. So the Swiss and the yen have been the least affected, but everything else, obviously, crazy moves. So anything that you kind of look at today, it's within monthly, weekly ranges, all of this movement, but it's obviously just massive of volatility. So you just kind of need to let it reset this week, and then I'll be picking up everything as normal next week. So movement will start. Which way the US dollar will go, who knows? It's still due some massive pullback on this leg, I think. So this huge move that we've had, we've done analysis on this. You know, I mean, it's had a kind of flag break pullback on the election news, but then obviously it's rallying back off again. So there is potential that this is all going to get left untouched. I think it will come back here at some point because the interest rates are dropping. Yeah. So if we get the 4.75 and FOMC statement comes out and says we've got another 1 or another quarter or another 0.5% this year, guys, it's going to come down, isn't it? If they drop it by 0.5% tomorrow, it's going to come down straight away. So we know we're dropping interest rates. Inflation's getting down to where they need it to be, so they've got to do it fast. So this is all just knee-jerk reaction to the election, but I don't think this is long-term direction. Overall, moving forward in a Trump regime, yes, you will probably find we trend up, but trends are formed like that, not like that. Yeah, so gold just fell down the elevator shaft. It will do. The US dollar's running. Gold is just across with the US dollar. So if the US dollar is pumping like that, gold is going to be pumping like that. Yeah. So US dollar cross. So this is coming down because the US dollar is strong. Obviously, that is the momentum. Sure. So yeah, there's not much point in analyzing much at the moment, but if you want to look at any specific pairs, let me know. But at the minute, your guess is as good as mine. Still long in the New Zealand US dollar. Yeah, so I mean, all this movement that we've had here, you know, it is just whipsaw, knee jerk. You sit through it, you wait for it to calm down, and it will be back to this sort of size candlestick again. Maybe by the end of the week, early next week, yeah, we'll be back to normal. So you've just got to kind of get over this. This is one of the reasons for those. I don't know if I did a video on the members group, but yeah, we looked at in the members streams about the ADR 60 analysis I did. All your ADR 10 readings are going to be all over the place for the next 2 weeks. Yeah. So this massive 300% volatility that we've had going in, all of your ADR 10 readings as of tomorrow are going to include a 300% ADR range. So all of your ADRs are going to expand, and then they will contract again after 2 weeks once that ADR day, this ADR day, drops off. Yeah, so in 11 days time, we'll no longer be using this. ADR 60 will flatten this out. It will increase, but it'll increase ever so slightly. So one of the advantages of using ADR 60 is you get a much smoother sort of analysis, don't you, of the average daily range. So be careful with any ADR reversal trades that you take in the next week. It's going to have to push a lot further to get to those ADRs, which probably isn't a bad thing, but obviously just bear in mind you're taking this reading in today. So during the war, it was correlated. Yeah, so war is good for gold. War is good for oil. War is good for the US dollar. But when gold is not doing anything specific on its own, it's just a US dollar cross. Yeah, it's XAU USD, NZD USD, GBP USD. Yeah, it's just a US dollar cross. If the US dollar rallies, the cross will do the opposite. However, if there is a massive demand increase or supply shortage of gold, as there was in the war, yeah, so as soon as the Russian war kicked off, Russia holds roughly 50%. Nobody really knows, but roughly half of the world's gold is stored in Russia. Yeah, there is an import-export ban on Russian gold. So what's happened to the supply of gold? As soon as that war kicked off, the supply of gold dropped by 50%. Demand didn't change. We still need it for computers. We still need it for cars. We still need it for jewelry. Yeah. So demand stayed stable in an upward curve. Supply collapsed. Therefore, gold price rallies. War kicks off. Great for oil, US dollar, oil export. Yeah. So it's all correlated. However, when it's not a movement based off of a war, you will find this does the inverse to to the US dollar most of the time. But it has got its own life, gold. You know, this is why I don't trade it, because it's erratic. Yeah, there's no anything that's a commodity or a supply and demand driven product is difficult to position trade, because you will go into parabolic trends on it. Parabolic trends are not good for position trading, as anybody that was in the US dollar CAD over the last 6 weeks knows. Thank God I'm out of that. Anyway, the norms are for it to be uncorrelated. Yeah. Well, then no, they are correlated. They're inversely correlated. Yeah. So it's a negative correlation. I don't know if this will have gold on it, but oh yeah, it does. I need to kind of correlate it with the Dixie, but if you find Euro US dollar and change that to, let's look at the monthly correlation. So basically Euro US dollar is the dollar index upside down. Yeah, so you see it's 90% correlated. So Euro US dollar, if the Dixie does that, Euro US dollar does that with almost 100% correlation. So that is the inverse to the Dixie. Therefore, it's 91% pretty much correlated negatively. So gold is a negative correlation of the US dollar with a 91% accuracy. So if that does that, the other will do that with 90% accuracy most of the time. But this is where it gets different when you get things like wars kicking off and stuff like that. Nobody's got anything to look at. No, okay, that's fine. It's going to be a short stream today then, isn't it? I haven't really got a lot to talk about. Basically, the upshot of the election is obviously it's a mess. So there's very little you can do this week to make any sense of market movement. So everything that has happened today is either going to flag and continue or undo itself. Yeah. So if you go back and look at, let's use the euro US dollar. If you go back and look at the last election in euro US dollar 225 ADR in 2022, November 2020 rather, sorry, which is there. Yeah. So this is the last election here. So as you can see, very similar reaction. We had a massive, that you can see where the election day is. Anybody guess where the election day is? Yeah. And then it took off. Yeah. Inversely. Yeah. So go back and look at all the elections and you will see there's usually a takeoff in one direction or the other. The direction is not the same every time. It's very, very random. So this week basically is just a case of stop and watch, but yeah, be prepared potentially for a month's worth of movement. However, there's one major difference this election that we've never had before, and that is the fact that we are in a massive interest rate drop from the back of a huge inflation hike. There wasn't that there. We hadn't even had COVID. Yeah, COVID didn't kick in. Oh yeah, sorry, COVID had kicked in, hadn't it? So we'd been through COVID, Trump era, COVID, inject yourself with bleach. Yeah, that's who you've elected, America. The guy that said to inject yourself with bleach if you've got COVID. You put him back in power. So we were coming off the back of COVID here. Yeah. It's a completely different world we're in now. We've got different conflicts going on. We're still recovering from everything from the pandemic. Inflation is at rates we've not seen it before. It's come back to normal now, but interest rates are still way higher than they were. When that hit, we were on 0.0 or 0.25 interest rates. We're now on 5 and 4.75 and 4. Yeah. So interest rates are totally different now than they were the last time, and they're different to the time before that. Yeah. So we're in a completely different world at the moment. So what's going to happen with this is just a case of have to sit and wait and see. But as long as it moves with market structure, we have an opportunity to get in and out. So that should continue to happen. There's no reason why we shouldn't. There's no reason to go parabolic, basically. Kind of what I'm trying to say. Morning, Harold, or afternoon. Pound a CAD. FTSE back at yesterday's lows, is it? Yeah. So that rally up on the FTSE was 146, which is 1.5 ADR. And we've just done 150 ADR back the other way and a bit some more. Just nuts. If you flipped a coin today at any point, every hour, and went long or short, you'd have caught one. It's just mental. It's just, you know, there's absolutely no skill involved in days like this. Press the buy button now, look. Stick a stop under there. Every probability you'll be back up there in the next 24 hours. It's just, you know, absolutely huge money-making opportunity. but you will also get stopped out over and over again if you try and catch the bottom. Most traders are just trying to catch the bottom all the time, or catch the top. That's why everybody goes wrong. You're just trying to get the turning point. Yeah, if you continue to try and get the turning point and this thing comes back down and tests that monthly low today, you're just going to hemorrhage your account. Yeah, it's just not worth it. Sit, watch, enjoy everybody else losing their money. Pound CAD. So pound CAD at the moment, we are still range bound. We've got a double top monthly there, but we are kind of contracting a bit in price. So we are getting a little bit tighter here. If this pushes up back into propulsion today, we end up back up here somewhere, you've got a definite contraction underway. So going to pop one way or the other. Obviously, pound is bearish now. Tomorrow, whatever I say today, wherever I think this is going today, tomorrow we are going to get information as to whether or not this is going bullish or bear. So we're expecting tomorrow an interest rate drop. Bailey has been very, very, very quiet about what they're doing with interest rates. So when that rate comes out tomorrow, we've got no press conference. We don't do press conferences in the UK for some reason. But the monetary policy summary and obviously the votes is the most important thing, because this gives you an indication as to what they wanted and what they got. So if the votes come out as a red number, basically, it'll probably come down more than it won't. So if we get the 4.75, I suspect the market will probably just continue to drive it short. If we get a 4.5, we'll be back down here tomorrow and testing these lows. So yeah, but I would want to be bearish on pound pairs ideally from now. So pound Swiss you can't really tell anything by. Pound US obviously you can't really tell anything by either. But yeah, bearish pound. So but obviously the thing you got to bear in mind here is you're trading the Canadian dollar, and the Canadian dollar is linked to the US dollar, and the US dollar is all over the place. So this could go anywhere. Beautiful double bottom on last week's low, but there's no signals. And again, any RSI extensions you look at this week, take them with a pinch of salt. Yeah, I mean, yes, EuroCAD is extended down to 90. Look at that. So 4-hour RSI extension all the way down here. Beautiful rejection at the monthly lows, look, and the weekly lows. I mean, every bone in my body is saying long this now. Yeah, but I also know that this is an election and it could do absolutely anything from here. So it's not much reward, is there really? You can get a 1-to-1 out of it. You could put a stop onto that 4-hour candle and get sort of a 3 or 4 hour move. Assume we're going to V-shaped recovery. With these moves, all these moves that you see, so looking at the pound CAD, yeah, all these moves that you see going in today, if you're going to trade any of this stuff, you have to look at it and say, right, I think we are either going to get a V-shaped recovery or we're going to get a continuation. Yeah, those are the two things that are going to happen, isn't it? Yeah, we're either going to continue from this rally or we're going to undo the rally. It's a knee-jerk reaction to the election, and it's not real. Yeah, so that's your decision-making process. Whenever you get into any trade on this, you have to go, right, I'm getting in long. Is it worth taking a V-shaped recovery trade? Probably not. You're going to get 1.5 hours out of it. Maybe it is. Stick 5 grand on it. You're going to make 5 grand. Lovely. But if it's a continuation, I'd be looking to short it out of that propulsion move. Broke that low. That's where they're going to add. Yeah. So if we get up to there and you think it's a continuation that's going to happen with the US dollar, short it up here. That's the only decision you've got to make today. Looking at every single thing that you've got. When you see days like this with ADRs hit virtually everywhere, your only decision-making process is, are we going to continue it or aren't we? Yeah, and make every single trading plan you put in place along those sort of lines. we are either going to V-shaped recovery. Yeah, we're going to do a V-shaped recovery, or we're going to have a market structure short, or a market structure long, or an A-shaped recovery. Yeah, it's one of those. There's only two things that can happen. It's binary. The market goes up, goes down. It's either going to do that or it's going to do that. One of those two things. That's your job. Apply a risk to that. So CAD Swiss, if you're looking at this one now thinking, oh, that's a beautiful top, get in short and get out down here. If you think this is pulling back beautifully and you're getting ready to get in long, stick a fib on today's move. When it gets to 50%, go long, stick a stop under there, and assume you're going to break that high. It's very, very simple, isn't it? Trading, it is up and down. That's it. Price moves up and down through time. That's all that happens. There's only one of two things that's going to happen. It's going to stay in a range, or it's going to break out. You've got a 50-50 shot. Nasdaq's rejected that high look. So just quickly, that's a test just finished. Let me just quickly grab these results. So for those of you coming into the members stream tomorrow, we'll be looking at this US dollar Swiss. So I've been doing some, whoops. So I just put that on the wrong spreadsheet. US dollar Swiss. I've been doing some testing on a pullback strategy. And I've been testing the lazy trader strategy that we've been covering in the members streams. And I'm just doing a full back test on every pair here with 1,000 system parameter permutations. 618. That's the worst yet. And it's looking amazing. Is anybody, any members in here that have got this EA? Have you been doing any testing? Because I've tested every pair now that is not Swiss or yen related. I've done a couple of Swissies actually, but the permutation tests on it are off the chart. 1,073 out of 1,080 passed profit. Aussie dollar Swiss, even the Swiss franc, 956 tests out of 1,080 profitable. It's 1,000 different strategies there that are profitable. There's 1,000 strategies that are profitable. There's 1,005 strategies out of 1,080 that are profitable. 700. That's a Swiss franc pair though. So Euro odd, 1,076 out of 1,080. There's 4 variations of the strategy that do not work out of 1,080. Bloody good, isn't it? So we're going to be covering the pullback strategy tomorrow, but I'm also going to dive into these results because these look brilliant. Euro CAD is the only anomaly for some reason, but all the others are really, 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 really good results across the board. So we'll look at all the permutation testing that I've done tomorrow in the members stream. And we'll do some visual testing on this as well because it's looking pretty good. But we'll look at that tomorrow. Shut that down. That's all done. Afternoon, Sarah. So yeah, pound CAD. I don't really know what else to say on the pound CAD at the moment. We are just contracting, so at the minute, I mean, structure on this is very, very range bound. You can see we've just switched structure short. So you've got reversal alert gone in there. Lower high, lower low. So I'll be looking for a pullback into propulsion for shorts, especially as we've got the interest rate dropping tomorrow on the pound. However, if the US dollar completely V-shaped recovery is today's move, the Canadian will do the same, meaning that you've got a bear moving against a bear, which is going to mean very little movement at all. So it's whether or not that US dollar rally continues as to whether we get that continuation tomorrow. You're also selling straight into support here, which is a tricky level. But if it breaks that level, we're coming to test last month's low. So it looks like a good short to me. but it's not extended. It's you're just taking a market structure trade here rather than a mean reversion. So, don't know. Anybody got any other pairs I want to look at? Anybody know, or what was your opinions on Trump and direction for US dollar? I'm waiting for some talking heads to come out and sort of give some indication as to what they think he's going to do for the pound. I mean, obviously, for the dollar. I mean, obviously, at the moment, the market seems to think he's going to be very good for the US dollar, doesn't he? But who knows? Tricky one. Have we got many Americans in here today? 48. What do you guys think? You voted him in? Aussie US is reversing. Yeah. They're all pulling back a little bit at the moment. Also, the probability of a flag break. He talks a lot about tariffs. Yeah, I know. This is the thing. Is what Trump did last time was rally the US dollar dramatically because he put tariffs on everything, which generated more GDP, which rallied the dollar. So everyone started investing. And he'll probably do the same because the last lot undid it. But who knows? Very difficult to tell, isn't it? Still in New Zealand dollar, US dollar? You're still in it? I mean, I got out there. Do you not have an exit up here at all? Even at a break even? I mean, hopefully they are just going to mean revert this move. So TP is 699. All the way up there. Oh, right. Yeah. Depends where you got in. I mean, still a very high probability, I think, of a pullback. Don't forget they're dropping interest rates. Yeah, I mean, all this movement today, you know, if you had a rubber and you could rub out a day, today's the day to rub out because today means nothing. Today is just chaos in the markets. If you look at where we are before the election, yeah, it's starting to pull back. Market structure is starting to shift. This is just nuts. So hopefully it pulls back. Pound US dollar. Your long pound US dollar. Yeah, it's really good looking long, that. Limit order triggers, look. Limit, 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 limit. Loads of limit orders triggering there. That's a good looking long. But, you know, it's a good looking long technically. It's a good looking long from an exhaustion mean reversion perspective. But you are standing in front of a steam train moving at 200 miles an hour. We don't know where the terminus is. This is the thing. This is the problem with this type of day. It doesn't matter what it looks like. This price action is not driven by normal price action. This is driven by absolute chaos in the markets. So you can't tell if there's more to come. Yeah. Don't forget, we've now got the tweet master in charge. He's only going to come out and tweet one thing. And this thing's going to go either ballistic that way or ballistic that way. Yeah. First thing he's going to come out and do is say, look how I rallied the markets. What we're going to do is we're going to put trade tariffs on China, the UK, everybody else. So, you know, if you want to import anything or export anything from us, it's going to cost you. Yeah. Oh, you're Ukraine. Sorry, we can't help you anymore because we need all the weapons for ourselves. Yeah. This sort of comment, which he comes out with, which the market is never ready for. This is why you get these stupid moves. This is the market panicking. You've elected him again? Anyway, we will see. I think gold has blown a lot of accounts today, quite possibly, yeah. I'm not a member of any trading groups, any social trading groups or anything. I got out of them a long time ago because it's just toxic, and it's all toxic. All it is, any of these groups that you look at, social, everything, it's people banging their chest going, look how amazing I am with this one trade that I've done. Forget the 99 I lost. Look at this amazing one. There'll be a load of people going, hey, I told you to short gold this morning, didn't I? I've just made $25,000. No, you haven't. But anyway, you can tell us you have, but well done. You had a 50-50 shot of the election being either a massive 300 ADR move in one direction or the other. I can also flip a coin. That's what it's full of. Yeah. Get them to show you them doing this every day. Yeah. A lot of accounts blue here. Like I said in Discord. Just go and watch the fun. Yeah. You'll find a lot of Discord channels, Telegram channels, everything. There'll be a lot of quiet people in there who are normally quite vocal, but they won't be vocal today because they've really, really, really hurt themselves because they tried to trade it. Just not, it's equivalent to news trading, this. If you can get on it, great, hold it. But if you can't, don't. It's just no point in getting involved. It's just coin flipping. But like I said to somebody else in Discord, you can walk into a casino and flip a coin and make a load of money at blackjack. It's not consistent, but it's still a way to make a lot of money. There's nothing wrong with it. It's gambling, but it's nothing wrong with it. I had up there a break even ignoring swaps, but I didn't take it. Yes. I have been saying for the last 2 weeks, I want to get flat for the election. Do the same. Because if the election goes against you, you're in trouble. Only because I've traded through elections before. And it's just a pain in the ass. There's nothing you can do about it, unfortunately. However, there's a good chance we will pull it back. Trading for two currencies with two rates drop tomorrow. Yeah, if you're going to trade anything, with you need to use a stop on anything. It's just you can't position trade through stuff like this. But you've got obviously the pound interest rate and the US interest rates tomorrow, so there's a massive volatility coming in. This isn't the end of this election move either. Yeah. The fallout from this is going to last for days. Yeah, so you're probably going to find one party is going to sue the other party. I haven't been watching the news today. There's no point because I've been watching this thing. But you're going to find that someone's going to sue someone. They're going to call vote rigging, etc. Notice how Trump put in plans, legal action because of vote rigging beforehand. Now he's won. No, not mentioning it. Not mentioning it anymore. If he'd have lost, you can guarantee it's all about vote rigging. So, there's going to be some fallout from this. The markets are going to get shocked all over the place. Trump is suddenly going to go, as soon as I'm in on January, this is what's going to happen. And the market is going to go, holy crap. Yeah, so you're going to get volatility coming for weeks on this, I think. But obviously with interest rates drive the markets. We've got two major interest rates coming tomorrow. So pound US dollar is going to be the most volatile thing on the planet tomorrow because we've got the pound interest rate and we've got the US interest rate. Both of them have the possibility of doing additional rate cuts. US now more than before. The pound, I think we will get the 4.75. I'd be very surprised if we got the 4.5. But, now Trump is in, everybody is going to be re-looking at the way they handle the current inflation because everybody deals with the US, everybody trades in the US dollar. This affects everybody. So all currencies and all central banks are going to be looking at their policy and either tightening or loosening it, depending on what's happening in the US now. So it's going to be an interesting one. But tomorrow, you might find Bailey drops by 0.25%. It said that's it for this year. Next interest rates we will look at in January, but we're certainly not doing anything December. The market may well see that as positive. The Fed come out and drop by 0.5% instead of 0.25%. You'll be back up there tomorrow afternoon. Nope. Friday morning. You'll be back up there. That'd be a lovely trade. These are the sorts of trades you want to put the money on, yeah? The reason I've done what I've done this month is not because of normal trading, yeah? I did 13.7% on Monday, which basically was all that US dollar CAD aggressive drawdown. It all worked, and I held it. Yeah, it's not a normal month. So these types of trading opportunities that you get are not normal trading opportunities. And you can make a very large amount of money on them. So they're good ones to take. You know, these are the ones you want to go in with big risk. Go in with the 2.5%, the 5%, the silly amounts, because these trades will make your quarter. Yeah. Anybody that was short expecting a Trump win this morning, yeah, they're out with a lot of money. I was expecting Kamala Harris win, which is why I put a trailing stop on that just in case. You know, yesterday when I went to bed, it looked like the market was expecting Harris to win as well. That's why I had the trailer there. If Harris had won today, I wouldn't be sitting on what I'm sitting on today. I'd be sitting on somewhere around 15k. As it happens, I made 4. But these are the days that you make your money. The most toxic is Forex Factory. Yep. Forex Factory is the most toxic. There's probably a load of people on there today. Where's the US dollar group? Be in there, wouldn't it? No, I don't know. But you just have people basically waffling in here. US dollar direction from election. This is exactly what it's. Look, what's your opinion on the US dollar if Trump wins or Biden wins? Knowing how US dollar moves, it's too much of manipulation. You can't tell if 1 + 1 could be 3 or 2. Thanks for the reply, but my mentor thinks if Trump wins, the market will go up. It will go up unless it goes down. I like this guy. Thanks for the reply, but my mentor thinks if Trump wins, the market will go up. You just said that. It will go down unless it goes up. I like that guy. Oh, and here's the troll, Emmanuel. He's been on there forever. God, I've been in this. I joined this 15 years ago. This guy was trolling back then, and he's still alive. At the moment, Tokyo is selling. When Sunday, New York closes, blah, 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 blah. It's just rubbish. Market is binary. It goes up and it goes down. The direction has got nothing to do with anything but the fundamentals in bank movement. That's it. Ignore everything you see on that place. It's all crap. And Instagram gurus. Again, I don't use Instagram. I'm too old. Did you have a look at the strat I'm currently trading? Nope, not yet. Haven't had a chance yet. It's on the list. I do know it. It's an old strategy. It's one of Larry Connor's, isn't it? I think. Where's my list gone? Is it that? No, it's not that. That. Yeah, it's on my list. I got about 20 strategies like that, which are daily strategies. we will have a look at that one. But you're not trading that strategy. You're using that for entries, aren't you, Harold? And then just position trading off the back of it, which is fine. It's just a reason to get in. Every entry, you know, the entry's got nothing to do with it, has it? The entry is basically a button press long or short. It's how you get out. So whether you get in with the market reversal alerts EA, the position trader EA, an ADR reversal, an RSI extension, a Bollinger Band, moving average, whatever you want to use, it's got nothing to do with making money. Making money is how you manage the position. So we can look at it. If it's got a good edge for entries, it's something I can build into the position trader EA. You know, it's just another way of getting into the market, isn't it, at the end of the day? But it's the position trading, which is why you're making the money, not because of that entry. So, but we will look at that one because it's all Larry Connors and Larry Williams stuff is it's all good. Their strategies still work today because they're all based around the way that banks and institutions move the market. They're based around usually stop and reverse based strategies. So the one that you've got, Harold, is a stop and reverse, isn't it? They all work because the market goes up and down. If the market does this, every single stop and reverse strategy will be profitable. If the market does that, they don't work. They're kind of a hybrid trend strategy, I would call them. The market has to be moving, but it doesn't have to be trending, and it doesn't have to be wide range bound. As long as it's not contracted going sideways, it's very hard not to make money, but you'll never make a fortune because obviously you're getting out as an opposite signal comes in. But yeah, we'll look at that one. It's on the list to look at. Might do that one next week, actually. This guy is still alive. Yeah. There's three well-known, well, to me anyway, well-known trolls on this forum. He's one of them. There's a couple of others. One of them was in my group haunting me for ages. I've blocked him from everywhere, thankfully, even from YouTube. He's also blocked from here. But there's another guy that, you know, most people probably know who he is if they've been in here for a while. But every single one of these, yeah. The reason this is such a bad place to be is if you look at this one kind of channel, if you like, in the forums, the trading systems, there's Harold knows who he is. There's 3,300 threads here. There's 3,300 strategies. There's 1.4 million posts. If you come in here, you will never get out. You will end up in a cycle of system hopping that never ever ends. And these people, like that guy and the guy that Harold's just mentioned, they've been here since I started trading 17 years ago. And I joined this in, I don't know, 15 years ago. They've been here and they're still there. They're still there. Going round and round and round and round and round and system hopping. Yeah. One of them has hopped into my systems, traded them, hopped away and hopped back again. Traded it, hopped away and hopped back again. He's even been back to what I do 3 times and he still can't work out it's the only way to make money. You know, it's just like, but you will get sucked in and you will never get out. Yeah. And 90% of it's scalping. Everyone's trying to make money on 5-minute time frames. Nobody makes money on 5-minute time frames. It's just, look at it. 18,000 posts on one trend line strategy. Every time you jump into one of these, 3 months of your life will go. And then you'll jump out and you'll jump into another one and 3 months of your life will go. By the time you realize 5 years down the line that all you've done is traded the same thing over and again, a binary market that goes up and down and moves through time, you'll either get it or you'll disappear and you'll go, I'm not doing this anymore. Yeah. Anybody that's got a red flag next to their name, basically, yeah, they talk too much. If they were traders, they wouldn't have a red flag because a red flag means you're an active member of the group. If you're an active member of the group, you're not trading. Got to use your heads. It's not until you've been here for such a long time you realize how toxic that place is. The best thing you did in the EA is the trading buttons. Yeah, exactly. It's all about. It's binary. If you buy it and sell it, that's all you need to do. Erebus is asking how I make so much profit using Lee's EA. Yeah, exactly. It doesn't, you know, this is the thing, Harold. It doesn't matter how many times you tell someone the same thing over and over again, and you come in here and you prove it for 5 years on YouTube, and you've been doing it for 15 years of your life. You can tell somebody the same thing as many times as you like. If they're not willing to listen, they'll just go off and system hop again. That's the problem. I did it for 5 years. I hopped systems. Then I found someone that went, slapped me around the face and said, you're an idiot. Do you realise all you've done is go from here to here to here to here, and someone has told you to press the buy and the sell button in a different way with a different indicator? Well, yeah, of course they have. Right, you do realise you're doing the same thing every time, don't you? Well, yeah, but I'm doing it different because this one uses a moving average. No, you're pressing buy or sell. The market is then either going to go up or down based on the weight of orders in the banks. Yeah. So why are you going to different systems to do the same thing? Ping, light bulb. Yeah, this place here has 3,000 light bulb moments that will all burst. And if you go there, you will never, ever become profitable because they're all telling you to do the same thing. Use a stop loss. Afternoon, Blue Trader. How are we? Afternoon, Georges. Haven't said anything to him. Well, Harold, for all I know, you could be him. Nobody knows who anybody is on the internet, do they? Anyway, it's all good fun. Nasdaq's off again. What can you do with it, eh? So new highs on the NAS. I think that is probably the all-time just gone. No, not quite. So all-time high is at 175 ADR today. 20 is basically 208 is all-time highs. So I'd be very surprised if we don't take that out today off the back of this. But yeah, okay. Right, I haven't got anything else to cover today because you know, this is just a crazy market today, so it's just a case of sitting around really. For those that don't know, obviously I've redone the live stream schedule now. So Mondays we're going to be doing the normal 8 o'clock stream, which is the upcoming week's news. Look at the fundamentals, look at where the market's going to move, why it's going to move this week, trade the DAX and the FTSE. Tuesdays is a member stream and Thursdays is a member stream, which is strategy development and whatever we need to cover, whatever we want to cover. Wednesdays is going to be now an afternoon stream because all the people in America said they missed me, although it doesn't look like many of them actually turned up today, considering there's only 50 odd people here. But so Wednesdays I'm going to do an afternoon stream now, which means we can trade the DOW and the NAS because they do move differently to the DAX and the FTSE. And then Friday is going to be kind of an open session for everybody, and we'll just do sort of Q&A, anything we want to discuss really, and have a look at the week. So that's the new schedule, mainly because members have given me feedback that they can't keep up with the content when I was running it every day, which is understandable. So we've got to cut it down and do it a bit slower really, but we'll cover the same stuff that I want to cover, and most of it's going to be about strategy development and obviously understanding how strategies work and looking at new ways, like Harold's one, which we'll obviously have a look at. But I'll build an EA to backtest it initially, you know, but at the end of the day it's just a way of pressing a button. So we're going to look at a lot of daily strategies over the next coming couple of weeks. I'm going to build EAs to backtest every single one of them. And yeah, we'll see if we can find some decent daily strategies to put into a portfolio. But I've got to obviously just build those out. So most of them Larry Connors, Larry Williams stuff, which obviously we know still works. Travel, welcome to the private streams. Travel has become a member. You now have a blue star. welcome aboard. Next one is tomorrow morning, 8 a.m. Don't be late, or watch it on replay. Obviously, all the replay, all the member streams are available, so you can go back and watch them all. Blue Trader, I didn't trade Tokyo. Trade today. No trades from yesterday's Euro session. We are completely out of the price action. We are riding the market's madness. Yeah. I really don't think there's any point in getting involved today. You are going to be, I mean, there's a big money making opportunity, but there's also a big loss opportunity. The problem with days like this is if you get in and you get stopped out, you tend to get cross, and then you get in and you get stopped out again, because this price action is going to be completely erratic from now on. And you just end up getting cross, which leads to over trading, which leads to over leveraging, which leads to blowing your account because you get cross with the market. The instinct with this type of day is to get in big. When you get in big, you tend to get burnt big. Yeah, so if you've been growing your little account nicely, or if it's prop and you've been, you know, you're up 3 or 4%, you can easily lose 3 or 4% plus in a day like this. So as long as you're aware of what may happen, you know, I presume he has actually been confirmed now, has he, as the winner? Yeah, 279. So he needed 270. So he's actually got, he's over the line, isn't he? We got 4 results to go, so she can't win. So yeah, he's confirmed. When I looked at it this morning, it was 265. That's the last time I saw it. So he was 5 away and she was 190 something. So, so yeah. I don't know. Don't know what to say. Right. You obviously know what you're doing in America. You elected them. Mind you, you only had 2 to choose from. So I'll be back tomorrow morning for the member streams. And we will obviously do some more of that strategy development. We got not Harold's strategy. We've got Phil's strategy to look at tomorrow, which I've got all the results for, which is looking really, really good. And we've got the pullback strategy, which I'll go through as well tomorrow. So that's what we're going to be doing tomorrow morning. And then if you want to join me Friday morning, everybody, it's just a normal session on Friday. Recently, I have been in and out, I presume that is, of cable small wins so far. Cool. If it's working, keep doing it. What do you think about the don't trade in December? Who said that? December, you usually get a Santa, what we call a Santa rally. So the S&P in December usually rallies. I say usually. The line's really thin. Where are we? So those are your December months. Let's go back another one. The difficulty is we've got COVID, obviously, fallout here, but yeah. So these are your Decembers. So the Santa rally basically is usually the anticipation of a high retail sales figure in January, which basically rallies the market, and a lot of stock purchasing goes on. So you tend to get a rally in December. Yeah. We had one down there, look, in 2022, but typically December is a rally month. And obviously because the market does the opposite, in the US dollar to what the indices do, you tend to find December has a down month. Yeah. And it can be quite bad. Some of the biggest squeezes, well, one of the biggest squeezes I've been in was US dollar Swiss, and it started sort of towards the end of November one year. I can't remember which one it was. And the whole of December, it just went like that. This is before I kind of started looking into the rally side of things with the S&P. So it's obvious, obviously, when you know that the S&P normally has an up month, that you would expect the US dollar to have a down month. But I've never heard of not trading December. Typically, I finish trading in December in around about the second week. So basically, I'd usually turn everything off second week of December, EA wise, so I don't get into new positions and just manage the positions out in December and then start again first week of January. But you know, this, if you go back and look at every single December that we've had, I can't really go back any further with this data, but you'll find that the vast majority of them are rallies, and usually quite big rallies, a lot of volatility. But the thing is, there's a lot of people say things like, don't trade in December, summer trading, shouldn't be trading over summer, yeah, take 6 weeks off. Yeah, if you take December off and you take 6 weeks off in summer, yeah, that's about a quarter of your year gone. How are you paying yourself? You've got to trade, otherwise you can't generate the revenue. Yes, it's more contracted or it's more expansive, but you just have to get through it. Don't forget, whenever you run a backtest on any strategy, it includes every summer and every December. Yeah, if you have a profitable strategy that you've backtested over a period of 5 or 10 years and the equity curve goes like that, it's going to have dips in it. Yeah, and if those dips are all December, put it into Quant Analyzer, look at it. If every single one of those is December, there's a reason. If half of them are December and half of them are not December, it's just trading. Market moves up and down all the time. So you can't say don't trade this month, because if you've had 3 profitable summers and 2 unprofitable summers, it doesn't mean summer is profitable or unprofitable. It means the market's just been moving up and down as it usually does. You can't eliminate times of year. Market doesn't. The market still makes money 24/7, 365. When the markets are open, it's moving. If the markets are moving, there's a money making opportunity. So you can't just say, if your strategy, however, doesn't work in December because it's a mean reversion strategy and majority of Decembers are parabolic, don't trade December, but prove it to yourself. You know, this is the thing, going back to this quickly before I disappear. Yeah. This is what everybody does. This. My mentor thinks. My reaction to this guy is, screw your mentor, do the work. If your mentor thinks if Trump wins the market will go up, go and look at the last time Trump won and tell me what the market did. Yeah, you've only got one set of data to use. You can't use it. Yeah, use your head. If my mentor thinks that December is a bad month to trade, and you can go and look at every trade that your mentor took during December for the last 5 years and he had a down month, that means that your mentor strategy doesn't work in December. If you're trading that, he's right. But you find out the information yourself. Do your due diligence. Don't believe anything anybody says in this industry at all. Verify it yourself. This is why I give out all of my strategies in detail. I explain every single mechanism that works within them, and I provide an EA so you can backtest them. Yeah, don't rely on what I say. All this data that I've just shown you there with those thousands of results of profitable strategies we're going to cover tomorrow, don't take my word for it. You've got the EA. Go and replicate those results yourself. Do you get the same results? Yeah, and it's probably right, isn't it? If you get totally different results to me, as Evil did, one of the guys in the member streams, he said, you do realize that doesn't work. There's a problem. That's how you find out. Yeah, but if everybody gets the same information and everybody gets the same result and they verified it independently themselves, it's probably right. Don't, you know, don't trade in December because someone's told you to don't trade in December. Yeah. If your P&L says don't trade in December, don't trade in December. Have you tried the position trade by entering randomly without using RSI? Yep. It's not as good. You can test this yourself. That one will do. So if you use the position trader EA and you set it to RSI strategy, I'll just leave everything else as it is, and then use the RSI on the current time frame, yeah, and set it to 51 and 49, yeah. What this will do is basically, as soon as the EA initializes, it will go, are we above or below the 50 line? If we're above it, trade. Yeah. And as soon as it closes a trade out, it will go, are we above or the 50 line? Below, trade. Yeah. So it's basically coin flip. Yep. So if you run that test, it will obviously apply. Probably better if I don't do it on optimization mode. It will apply position trading to the market at random. Yeah. I don't know. I've no idea how this is set up. It's doing drawdown control, which is good. I think this is probably set up to 6 trades or something before it does DD control. But as you can see, it's just getting in and getting out because that's all the market does. The market moves up and the market moves down. Yeah, so as long as the market is moving up and down, it will take trades and it will manage the trades. It will do the drawdown control as it's set to do, and it will exit the positions when it has a profit. This is equivalent to position trading a coin flip. Yeah. The difference is I wouldn't have got in long there. I would have waited for the market to get down before I went long. Yeah. I would not have got in short here. I would have waited for the market to go up more before I got in short, because the way that I trade is I'm waiting for banks to have made their move and I'm trading off of their profit takes. This is literally flipping a coin and going, if we're below 49, go long. If we're above 51, go short. Yeah, so it's trading completely at random, but it's applying the position trading methodology to it, and it's made 14 grand in however long it's been trading. What's that? May to October 21. So in just over a year, it's just banked 11 grand, 14 grand. Yeah. Doing nothing but flipping a coin and drawdown control and position trading methodology. However, the edge is 50-50. Yeah. If you use RSI, the edge is higher than 50 because if market structure is going to work, yeah, like that, we're getting in down here rather than getting in up here. Yeah, so what you're doing is you're putting the odds in your favor by using an oscillator for extensions. I use RSI, but as I keep saying, you can use CCI, MACD, you can use anything. Harold is using a completely different entry mechanism to get into trades. Doesn't matter how you get in, does it? This is proving the fact that you will make money if you position trade, if you flip a coin. However, on a squeeze that lasts for a long time, you will lose your edge. Yeah, and you will get into more drawdowns. This is about managing drawdown, managing risk. Your account, whether it be $1,000 or $10,000 or $100,000, that is your working capital. Your job is to apply your working capital to the markets to extract money from them. How you apply this money to the market is how you make money. So position trading is about applying this framework to price and adjusting your entry in your favor, which gives you an adjustable edge. A normal strategy has a fixed edge. If that fixed edge fails, you make a loss. Our strategy has an adjustable edge in the fact that we can adjust our price. Therefore, our edge plays out a high probability of the time. If you use an indicator that indicates the edge is going to be greater because of an extension and an elastic band already in the market, ready to flip or snap, that edge becomes higher. The probabilities become higher. So yes, this is answering that question, hopefully, that you can make money on a coin flip. It's up 124 now, so 25 grand up now, yeah? So we've made 25% increase on the account on one instrument over however long this has been doing it. Not doing anything, am I? I'm applying position trading methodology. This isn't a strategy. This is a way of trading. This is the difference. Yeah, this is not a trading strategy. This is a methodology, a risk mechanism. Position trading is a risk mechanism. Stop loss, risk reward is a risk mechanism. Hedging is a risk mechanism. Yeah. A strategy is a set of rules to press the buy or sell button. You then apply a risk profile or a risk mechanism to the market to extract the money. Yeah. This is a great example. Look, I have no idea what this is. I haven't set this up to do anything. I pressed the reset button to set it all to defaults, and I just adjusted the RSI, and it makes money. But you're going to have a higher probability of your trades working out faster and taking less drawdown, which is the key, taking less drawdown, if you apply an indicator that measures market extensions, which is what we do. There you go. So that's made 35 grand. It did 40 grand's worth of drawdown. It's fine. I've got 100 grand's worth of working capital. I used 40% of my working capital to produce a 35% return. Again, everybody thinks, that's rubbish. You can't do that. Why can't I? Who told you? I know who told you. I know who told you you needed a positive risk reward. It's these guys in here, because these guys in here are talking a lot. But are they actually making money? Are they applying a mechanism to the market that makes them a load of money? Hang on a minute. Elasticity band trading? Has this guy been in the boot camp? He's got a red flag. He must know what he's talking about. But, you know, there's all this stuff. Look, many different lines. You've got an oscillator with multiple levels. You've got two moving averages applied to an oscillator with levels. At the end of the day, all this is going to do is tell them to hit the buy and the sell button. I can guarantee you, whoever's in this strategy now is going, we've just got a sell signal here. Stop above the high. TP at 3R. Oh, that one didn't work out. That's what they're doing. This is what all of these are doing. Every single one of these in here is doing the same thing. Horizontal line system this guy's got. It's called support and resistance, mate. It's been around for years. It's got a 50% strike rate. Why? Because when you hit it, it either goes up or down. How do you apply your risk to the entry of that strategy? How do you extract the money from the buy or the sell? That's how you do it. Yeah, doesn't matter how you get in, does it? This is what I keep saying. Doesn't matter how you get into the market. It's how you get out of the market. That's why I made money. Or rather, it made money. It went short. It was wrong. It went short. It was wrong. It went short 6 times in a row and it was wrong. And it came out with a beautiful profit at the end of it. It's not about being right. It's about applying a mechanism to the market. It's the bit everybody misses. This is what we covered in the members streams. You know, the first few weeks is all about getting all this stuff out there because it's important. It stops you system hopping. So there you go. Yes, I have. Well, I haven't. I have just then. I have tried it, trading randomly, it works, and sometimes it's even better. Yeah. But using your head is better than using randomness. Yeah. So you can apply, we did a session on this, the probabilities of trading. Wasn't a very good session, if I'm honest, but the outcome of this session will teach you that if you have a strategy which has a entry and a 1-to-1 risk reward ratio, after any period of time that you test, I don't care whether it's 6 months, 6 days, or 6 years, or 60 years, you will come out at the end of that test with 0. Because using a probability of 1-to-1 risk reward ratio is the same as a coin flip, and it's a zero-sum game. This is binary. This market is binary. It goes up and it goes down. It doesn't do anything else. There is no angled movement. It's up and it's down. It's a market. It has a buy and a sell. There is a gap in the middle called a spread. That's it. Bid, ask. If you go long and short with a 1-to-1 risk reward ratio, you will come out either with one of those ratios at the end of it, one of those strike rates. It would either be a 49, a 50, or a 51% strike rate, depending on the last run of trades that you had, whether you had 10 winners, 10 losers, or 5 winners, 5 losers. That's what will give you that. That will be the outcome in profit. If you get in with a risk of 1 and a reward of 2, you will come out with the same result. But what will happen is your strike rate will drop from that 50% down to somewhere around about the 33, 34, or 32% mark. So what you're doing is, by applying a positive risk reward, you're reducing the strike rate and ending up with the same result. The trouble is, nobody can apply that risk reward ratio consistently to get the same outcome. So what they do is they go, well, this isn't working, I'll try 1 to 3. They try that for a bit, have a losing run, and then they drop it back down to 1 to 2. But that becomes negative and their P&L drops. They never recover it. Yeah, because you're trying to basically get a statistical edge out of something that is random. It's not possible to do it. There's many videos out there that will teach you this. You know, it's a zero-sum game. It's binary. You cannot make money out of a binary market. Binary options. How long did they last? Everyone was like, hey, look, it's binary options. Let's trade binary options. We've only got to be right or wrong. They traded it for ages, and there was loads of people out there going, I've made 25,000, I've made da-da-da-da-da, and everybody in the casinos for decades has also been going in and going red or black and coming out with winners and then coming out with losers. But at the end of the day, if you go into a casino every day for a year, you will come out with the same money as you went in with, because there's no edge in red or black, or is there? There's a 0. The house wins. We don't have that. We have binary. Yeah. The only way to get in is to go, I'm going short. Oh, the market's gone up. I'm going to change my price to a higher price and wait for the market to go down and exit. This trade here is a good example. You could have got out of this very easily. This is targeting 1.5 hours of movement. So this is asking for 1.5 average daily range of movement in one direction. But if I'd have got in short there, I probably would be out already. The next day I'd have been out. Look, we've made plenty of money there to get out, but we didn't. We get in the next day and the next day and the next day, and you're stuck in it, but you had the exit. Because this is being greedy settings, it didn't get out. But it will do, because we moved our price to there, that didn't work. So we moved our price to there, that didn't work. So we moved our price to there, that didn't work. So we moved our price to there. And all we're doing is waiting for the market to do what the market always does, which is that market structure. There's never a period in time that anybody has ever shown me on any chart ever that does not include market structure. Yes, you get squeezes, and some of these squeezes last for a month or so, but they always mean revert. If that is going to continue as it has done for the last 100 years, there's no way not to make money doing this. You just have to survive the squeezes. Yeah. But if you use a stop loss and you're trying to short a rising market, as everybody is, trying to pick the high, trying to pick the top, because that's the best place to get in, you're just going to lose again and again and again and again, because you're placing an order in the market that tells you to lose money. If you place an order in the market that tells you to lose money, the market will invariably move, because that's all it does, to the area that you told it to lose money at. And then it will make you cross, and then you'll double up and you'll go short and you'll get crossed out again. Then you're 3% down in your account, so you go 5% short and you'll get stopped out. All of a sudden you're 10% down in your account, so you go, screw it, I'm going all in, and you blow your account. Sounds like prop trading, doesn't it? Same thing. Every single one of these is telling you to do the same thing. There's just 3,300 ways to press a button. None of them work. Trust me, I've been around a long time. I've probably tried them all. Not all of them, because I couldn't. It's not enough hours in the... You basically can't live long enough. If you wanted to do all of those strategies and try them all out, you would be dead by the time you get to the end of the list, because they keep adding new ones. Yeah, everybody can come up with a new idea. It's the same idea as the rest of them. How shall I press the buy or sell button? It's just nuts when you think about it, isn't it? Outro, just got back from work and was glad to see you on here. Had a quick question, looking to get into position trading as a longer term strategy. We'll be signing up for the members chat soon. Cool. Once work in uni calms down. Cool. Would you say position trade EA is stable to use with prop firms? No. You can't trade on prop, Outro. It doesn't work. It's all exactly what I've just been explaining. Yeah, prop are taking advantage of the fact that you cannot do what I've just said. Whatever you do ends at that. Every risk reward that you apply to a market ends with that. Human beings, after their P&L goes like that, get cross, which makes them take a higher risk. The higher risk loses, which makes it negative. That makes you crosser, which makes you more unpredictable. You're still applying risk reward to an unpredictable random market, but they know that as a human being, you will get it wrong more than you get it right. Why don't they let you do this? Because as I've just proven, a coin flip can make money doing this. But they won't let you do that because they deem it to be too high risk. The reason they apply risk frameworks around prop evaluations is because they know that you can't make money with them. Anybody can make money in prop. I've proved it. I've been in here and I've passed evaluations in a day. I've done a morning session where I've passed stage 1. I've done an afternoon session where I've passed stage 2. 6 o'clock that evening, I'm funded with 100 grand. It's easy, but it's not consistent. You can't sustain it. It's luck. It's random. I flip a coin and go long on the DAX. Look at today. Prime example, yeah? Today, I went long on the DAX. If I'd have applied a 2.5% risk to my account there, I'd have made 7.5%. Actually, I'd have made more than that. I'd have made somewhere in the region of 2.5, about 10 and a bit % profit on that. Past evaluation. This afternoon, I traded the NASDAQ and I got a 3R and a 1.5R. So if I'd have risked 2.5% on that, I've made 7-ish, 8-ish, probably past evaluation this afternoon. Easy. Yeah. Tomorrow, I'm going to take these exact same trades and I'm going to lose 2.5% in a hedge on both of them. I'm going to be negative 5%. Okay, this is my funded account. Oh, that's a shame. So I've got to get that 5% back now. So I need to risk a little bit more the next day. Otherwise, I'm probably going to lose. Pop, there goes the account. Yeah, they know that there is no trading strategy in the world that does not have drawdown beyond 10%. It's physically impossible. Nobody I know ever has not drawn down by more than 10% in their account to make money. That's what your account's there for. It's there as capital. The strategy that I've just shown you here drew down 39%. Hedge funds regularly go into pension funds regularly go into 30 to 40% drawdown on the equity because they use the equity to make money. but you can't predict where the market is going to go, but you can predict market movement annually. Statistically, it's done the same thing for 100 years. All we're doing is we're applying a framework to movement to extract money. That's not prop. Prop is flipping a coin, gambling, going red or black. Playing blackjack, basically. Go into a casino, right, with $500. Yeah. Or put $500 into a 100K evaluation with a prop firm. Yeah. 24 hours later, tell me which one has worked. You'll get the same result. You'll either win or you'll lose, but there's no skill involved. Random. Position trading extracts money, but it takes heavy drawdown because you're using your account capital as risk. It's a business. Yeah. I've used this analogy many times. If you set up a business on the high street with 100K, yeah, you've got to, first of all, outlay 3 months worth of rent for your shop. It's a very expensive shop. I've got to buy stock. Yeah, I've got to employ staff. Okay, so I'm 65K down on my starting capital before I open my door. As soon as I open my door, I start making money, and that dwindles away, and then it turns into profit. Your capital, your account balance, is your working capital, your risk, your allocation of your business into making money. Yeah. If you only use 0.5% of it with the risk of losing 0.5% of it every time you press a binary button, you won't ever make money. They know that in the prop firms. We know that because we tried it for X years. However many people are in here, however many years you've been trading, how many times have you lost money and blown accounts? Because you're trying to apply a risk to reward ratio to something that is random, that is never going to give you anything more than a zero-sum game. By the time you get hacked off enough with that strategy not working, you go tilt. That's why, and that's what the prop firms know. Aussie New Zealand 125 ADR. I don't know why I'm calling out ADRs. Everything's at ADR today. Pointless. Travel outro. You can, but with 5% daily drawdown, it will take you months to get to target profit. Yeah, so I mean, you can position trade. You would need to use a risk of, I don't know, test it. Run a test. The best strategy to use with prop would be using ADR reversals. And using a big ADR reversal. So something like a 150 ADR, targeting, you'd need to do drawdown control really quick as well. So targeting something like 0.3 ADR. You can't use martingale. Well, that is not martingale. But you can't add, a lot of these you can't add to trades now either. So they won't even let you trade position trading. But most of them won't let you have anything more than the original size of lot. So you couldn't use a lot multiplier. You'd need to get them really close together on these as well. So if you risked 1.5%, actually you need to probably go in, 1.5%, let's say, on an ADR reversal strategy like that. You want to get in tight, so you'd need a 5 MA. Where's the moving average? There. So that sort of strategy is the closest you'll get to working on prop. But you're not going to get very many entries. But when you do get them, they're going to be high strike rate. Yeah. So, but as you can see, because we're using a tight drawdown control and a negative R, it's going to be hard work to get there. But that's the only way you're going to get there, because the only thing you have got to focus on in prop is drawdown management and drawdown control, isn't it? So what prop is about is saying, hi, want to be a trader? Drawdown control. Yeah, don't use more than 5% of this account. No trader in any institution anywhere has ever been told to only use 5% of their account. If that was the case, they would turn around and go, why the hell are you giving me 100 grand then if you only allow me to use 5 of it? What's the point? Just give me 5. They don't. They want it to make it look like you're going to get a load of money. You're not. You're getting nothing. You're getting 5. or 10. That's all they're giving you. It's all smoke and mirrors. So basically what they're asking you to do with a 100k evaluation is to double a 5 grand account, basically 8 grand. They want you to make 8 grand. So they're giving you 10 grand and saying, give me 8 back. So they want you to give 100% return on an account within a few weeks. Does anybody know any traders on this planet that make 100% return within a few weeks consistently? Don't exist. It's all lies. There you go, that's up. So we got up to, well, that's made 18 grand. So we got up to, that's a pass. Yeah, so the run up to a pass, we took 36 trades, we passed evaluation. We had a bit of drawdown there, and then it ran up. And obviously you can see it kind of, another evaluation pass. And this is your funded account. There you go. It's 4 years it's taken, 4 years. It can work. Ain't going to work in 5 minutes. This is what real trading's about. Yeah. You're going to be returning somewhere in the region of 18%, but you're going to use 15% drawdown to get there. There's very few strategies out there that you will find that have a higher than 2 to 1 return on drawdown. Which means if I'm going to take 10 grand's worth of drawdown, I will return 20k. There's very few out there that do that. I can give you 100 strategies right now that will give you a 1 to 1 return on drawdown ratio and make you money. Yeah, one of them is called a pension. Best case scenario you're going to hope for is that, by putting in a load of hours and using your own capital. If you want to do it the easy way, get a pension. They'll give you a better return on interest because pension funds are allowed to draw down 40% of their account. You're not doing anything different to the banks. Prop, you can't. Prop is a different thing. Common, this took my swing trading to the next level. Yeah, this is swing trading. Position trading is swing trading. We are trading swings. What we're not trying to do is get the swing right. That's the big difference. Yeah, I tried to get the swing right there. It was wrong. So we waited until the swing was right and then we got out. Yeah, this is what it's all about. You can't predict the market. This thing moves up and down at random. You can't predict it. Yeah, if you're trying to pick the top and the bottom of every move, you are going to die way more than 50% of the time. And when it goes your way, you're not going to hold it down to there, because as soon as it gets back to the point where you get to where you've lost all the money, if you've lost 2.5% of your account, when you get 2.5% in profit, you're going to shut it. You're not going to hold that trade because you want your money back. That's trading, isn't it? Yeah. If you remove the ability to lose money, you will just take money. Sounds really stupid, but this is what everybody in the industry does. Banks, institutions, funds, all they're doing is applying a risk mechanism to market movement. They have no idea where it's going to turn. None of them. Not even the central banks know where it's going to turn. They can't control it. There's many, many, many banks. We've got a members stream video all about this, but there's many banks that control this thing. If you've got 5 banks going long and 5 banks going short, this one's got 10 million and this one's got 5 million, the price is going down. These 5 are trying to move it up. They will lose. Do you think they take a loss of 100 million? No. They wait for price to go back up again. They wait for these guys to use all their ammo and then they fire back. Because they do that all the time. It's what we call market structure. That's how the market moves. Everybody kind of knows it, but nobody knows it. You see what I mean? It's one of those things you can observe on a chart, but what the thing you're trying to do is trying to figure out the best way to pick the ability to be right. If you remove that, yeah, so the next trade you take, try this. If you haven't done position trading before and you're new, don't know how many people are in here. There's not many. You probably all know this anyway, but if you've got any strategy you trade at the moment, don't care what it is, how it works, what time frame it's on, it's all totally irrelevant. The next time you get a signal to go in on your trade, whether it be a long or a short, just use a 0.01 lot size. Yeah, take the trade, don't use a stop, and wait. And then when you get a positive P&L, bank the money. You'll suddenly go, Wow. Why did I win? Well, it went up for 3 days, and then it came back down again. Why did I win? You won because you didn't ask the market to take your money away. A lot of the prop firms also require you to have a stop loss because they know that that's how you're going to lose your money. Everything's weighted in your favor against you. Yeah, it's just not going to work. But you can be lucky, and as soon as you're lucky once, and this is what they hope, I think, most of these prop firms, is they hope that you get an evaluation stage 1 pass. Or if it's the 1 evaluation, they hope you get that funded account, because if you've done it once, you can do it again. Yeah, you can flip a coin and you can win or you can lose. That's what's really happening underneath the hood. But from your psyche, you've become a successful trader. And they know that, and you will keep giving them money until you crack it. And then you'll get to a funded stage, and you will be lucky enough at some point, hopefully, to get a payout. But when you get that payout, look at how much you've outlaid. It's not going to be enough. And then you'll give up. But then again, it's just like another trading strategy. You might as well just go to this place and just pick one of these at random. Best thing to do is sort it by replies. There you go. TMS. But the reason I mentioned that guy earlier, yeah, because Ilfran's really good guy. Yeah, I think he died or he stopped basically, but it got taken over by this guy. Took over the thread. Yeah, you know, it's just these people just do this all the time. But anyway, pick this one. It's really good. I traded this for years. Didn't make any money out of it because it basically uses multiple oscillators. And if you're in the members stream, you know exactly why that is absolutely pointless. Yeah. Let's put 2 indicators on the chart that tell us exactly the same thing. Price has gone down. I can see that. I love talking to myself. I've seen you for a few years now. Yeah, I know. I know the name Outro. I just haven't been here in the afternoons for the last month. That's why. Yeah, so you just use small risk. Just make sure that whatever account size you use, you're using very, very, very small risk. So 0.01 per 1,000 in the account to start with as a really easy mechanism to try it. If you want to do it properly, use the position trader EA or the market reverse alerts EA, and that will automatically calculate risk correctly for each instrument. But to start with, just use a tiny, tiny lot and get in and wait. Watch the bootcamp. Everything's explained in the bootcamp. You've probably watched that already. 200k is actually 20k. Yeah. Yeah. So this is exactly it, Trouble. What they're doing is they're saying, here's a $200,000 trading account. But what you actually get given is a $20,000 trading account, and they're asking you to return 16,000. So they're asking you to 100% that account or 80% grow that account to pass an evaluation. Yeah. It takes me a year to do it safely. Why do they think you can do it in a week or a month or 2 months? If you can double an account in 2 months, you're over leveraged by an unbelievable amount. Yeah, it's just not doable, but that's what everybody wants to do. Anyway, Blue Trader, thank you. See you tomorrow. He's off from Pontevedra. Right, I will go now because it's 4:20. I've been on for 2 hours. So markets are crazy as you like, obviously today, but not going anywhere, are they? So good luck if you're trying to make some money out of this today. But my advice would be to come back on Monday. Just watch, see what happens. There's plenty of opportunities out there, but bear in mind it's just going to be volatile as you like. And, you know, all of these can be back up here by the end of this week. We've got FOMC tomorrow. FOMC could reverse the lot. FOMC could rally the lot. Could go anything. So just be very, 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 very careful if you're trading at the moment. As I say, the only exposure I've got on at the moment is one trade on the Swiss yen, which I haven't managed to get out of, and it's not letting me out today. It almost let me out, but it didn't. I should have got out yesterday, but it looked like it was breaking down yesterday. but it wasn't. So yeah, I'm in this. I've got multiple positions on it. I'm very close to average, so I will get out of this if we get down tomorrow. So if I can get out of this by FOMC, I will, and then I'll be flat, and then I'll be back on Monday, and we will start trading again properly. So yeah, anybody coming tomorrow morning, we'll be going through the strategy results for 2 strategies. Yeah, looking at basically fill strategy, which I think has got a lot of legs for potentially just another entry mechanism for position trading. But it looks pretty good. I like it because it's a variation on position trading. So it's something I might look to put on a small account to forward test it, which should be a good experiment for us to do. But I'll go through the results tomorrow, and we will try and pick some settings tomorrow for that. And we will look at the pullback variation on it, which is basically fill strategy flipped on its head. So we'll look at those 2. And one of them is going to be for Swiss and yen pairs, and the other one will be for the European pairs. All right. So I'll be back tomorrow morning, 8 o'clock. If not, I will see you on Friday, hopefully at 8 o'clock. And we'll go from there. How do I get into members part of Discord? So if you go to here if you go to the channel, now you're a member, and go to posts, there's a post here, tells you how to access Discord. So basically you've got to link your YouTube account. I don't think it matters if your name's different. You've basically got to link your YouTube account to your Discord account. Yeah. So you just link the 2 together, and then it goes, oh, you're a member. And then all of a sudden that will appear. So it doesn't matter what your name is. It's to do with the account linking. Yeah, so go and read that post there. And that will explain how you get into the Discord group. All right, have a good one. I will see you guys tomorrow. If you need any help, I'll be in Discord. Have a good day.